Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment to Traders review, one of the last reviews for this year. Of course, we're going to be analyzing the 51st report of 2018. So let's start off with the New Zealand dollar, which is on top of our list. We're looking at, of course, changes in commercials positions. We have a 27% change, huge change in commercials. 30% change in large speculators, so very, very large changes. We're talking about a currency, and as I said many times previously, these changes are much larger than, let's say, if we're looking at a index. So let's analyze the situation. Commercials became net short, and large speculators are net long again. If you look back on this 52 weeks time range, we can find a similar change, which happened a couple of months ago. You can see that this change signal, when seen, was actually just at this top over there, pushing prices back down. So, of course, COT change signals are effective in the near term, in a short term period. So, we can expect a further decline early next week. And if we jump to the 5 years chart, you can see that the last major extreme was this very large all-time bullish COT extreme in the market. This was a very effective signal pushing prices higher, and as the market rallied, you can see the extreme, the bullish extreme decreased. And of course, it's questionable whether or not we're going to be calling this a significant bearish one. It's 26 report extreme both in commercials and large speculators, but it's not that hard to see. There's plenty of space left to reach even greater levels, which means in the medium to long term, there's a high chance, high probability that this rally continues. We're going to see in the next couple of weeks, month to come. The next market is the S&P 500. We have a 22% change over there in commercials positions. And as you can see, it's really nothing, a bit larger than average, but not that unusual. So we're going to move over to the 5 years chart and see how extreme the market has become. And as you can see, we're still very, very close to these bearish extremes, even though the market has declined significantly in the past couple of weeks and months. So we're going to see what that means. But one thing's for sure, from the COT reports perspective, there's a very high probability of further declines coming in the medium to long term. Nasdaq is our next market, 16% change over there in commercials and 9% in large speculators. Again, this is very small. Of course, we're talking about indexes, so respectfully to other changes in the past 52 weeks, you can see that it is not that unusual. It is bearish, suggesting further declines, but I think from the dynamics of the market, that is easily probable. And of course, the extreme is showing us a different picture than the S&P 500. In this case, the most bearish extreme was back over here, the second part of 2016, and since then, traders have shifted their positions. Large speculators are actually both large speculators and commercials are very close to the zero line, net zero position. So they haven't made up their mind. A little bit different picture over here than the S&P 500. Now moving on to large speculators COT extreme, we have the heating oil on top of our list with 154 report extreme. In large speculators position, 76 report extreme can be seen in commercials. And of course, as you can see on the charts over here, it is an unquestionable bullish COT extreme. Now, whether or not this is going to affect prices right now, or we may need to wait a little bit more, is of course up to the market to decide. One thing's for sure, stress levels have reached a significant level, although there's some space left to reach even greater extremes, as you can see back over here from the end of 2014 up until the first part of 2015. Those were the most bullish extremes in the market, which, as you can see, was effective, although did not change the major trend in the market up until 2016. So that's that. It means that the decline could continue, but we should be prepared for a shift in trend. Lumber is our next market. We have 147 report extreme over there in large speculators. The exact same extreme can be witnessed in commercials. Again, we're talking about a bullish extreme, large. We have seen greater extremes in the past. but it is telling us a very bullish picture in the medium to long term. And the last market for this review will be the live cattle, where we have this 40 report extreme in large speculators, 41 in commercial, so not that large. This is a bearish extreme, definitely more bearish than bullish, of course. You can see even greater bearish extremes in the past, so it's just telling us the story of increasing stresses in the market towards the bearish side, which of course could materialize in the next couple of weeks, month, and we could see lower prices coming in the live cattle market. So that was all for this review. Don't forget, you can look at other COT charts for free on COT charts page at cotbase.com, and of course a more in-depth and detailed COT analysis can be done if you are viewing this page. I wish all of you a Merry Christmas and pleasant holidays, and of course I'll be out with the next review once the report is out. So take care, have a great weekend, and again, Merry Christmas to all of you. Bye-bye.